Welcome to TheoTrade. This is Don Kaufman. You are joining me here on April 6th, 2016. What did we see in the markets? Well, if you were short, you got squeezed today with the S&Ps up over 20 handles. If you've been long the market, well, you're quite pleased. So no intention whatsoever to rhyme there, but yes, the shorts are absolutely getting squeezed. The longs are extremely pleased in this, and I have to tell you what drove markets today, okay, isn't necessarily those FOMC minutes that came out. Yes, if you are short the markets, you're probably thinking to yourself, Yellen! It really wasn't so much Yellen. Now, let's start to really dig beneath the fact that the S&Ps were up 20 today and what actually drove markets a bit higher over here. And to kind of kick off tonight's video, we're going to look at sectors. Healthcare, up 2.65%. All we're looking at here are the 10 major sectors of the S&P 500. And once in a while, you got to stand back, got to look at the sectors. Why healthcare? It is one of the larger sectors. Today was all about healthcare, okay, and energy. Now, energy, if you look specifically over at oil, all right, you're now trading at $37.81 a barrel, okay, and saw some huge action to the upside. And this is, again, following the petroleum report that was out this morning. So, again, also some follow-through from yesterday's buy-side activity. But oil just taken off from, again, the 35 handle all the way into the upper 37, even $38 range, touching right up against it in trade today. So energy obviously leading us along with healthcare. Now, if you think that's unusual, well, it is. Let's glance for just a moment, not so much at the sectors, but the heat map, which is the S&P 500. And again, healthcare is just on fire right now. Again, you got Pfizer, you got some news out there, deals breaking up, inversion deals and so forth are breaking up over here. But when was the last time you saw stocks like this, regardless of even news, moving, 5 and 6%? And a huge amount of this happens to be on the back of none other than biotech. Now, here's a product that I'm going to bring up. It's XBI. Okay, it's the Spiders Biotech ETF, 7% today alone. Now, the reason I don't typically bring up a product like this, it may have traded over 14 million shares, and although I think the underlying ETF is liquid, the options market out there, it's thin. It's got decent volatility, but the options market, when I say it's thin, the bid-offer spreads are, relatively speaking, they're a wide market out there. Okay, so we're seeing ridiculous action inside of areas like healthcare, energy. One of the sectors, though, that really stood out to me today that didn't participate, okay, in really any of the upside happened to be none other than the XLF. Now, why I found this, okay, very, very unusual, had to do a tremendous amount with the fact that the bonds, they sold off. And the bonds selling off takes interest rates a little bit higher, should have fueled the XLF to not just rally, but I would have figured that the XLF would have been at the forefront of the move to the upside in the SPX. We're not getting, again, any participation outside of the XLF. Moreover, wanted to go a little bit deeper than just looking at the XLF. Okay, so we're going to zoom out for just a moment here. We're going to go and add a study to this. Yes, a study. Now, I'm not much of a market technician, okay, but I am very much into comparison here. And I just want you to look at how large the divergence happens to be between the NASDAQ currently and the financials, because there are very few times, okay, in recent times that we've seen the divergence rip so quickly. So let's go ahead and also change the style. We're going to compare a line to a line in here, just so everybody kind of gets what I'm saying. So all this is, okay, and we're just going to open up to kind of a full screen over here, give you guys just a better, cleaner view, is often I've been talking about comparison, looking at one product versus the other, looking that markets typically trade to high degrees of correlation. And if you look back over the last 9 months, sure, there's some divergence, okay, in this particular product. And during periods of volatility, yeah, you see, the NASDAQ getting crushed. And again, here's the NASDAQ. Here happens to be the XLF. Okay, this is a substantial divergence between, again, NASDAQ and financials over here, more so than we have seen in a very significant period of time. Again, divergences like this, they do not last. Okay, one of the trades in this case you might look for, okay, is a pairs trade, something like short the NASDAQ, long the financials over here. Now, again, this would be a very, very short duration trade. One of the most difficult things to be able to really ascertain in this trade, how do you do it? How do you actually align a trade where it's one product versus another product over there? Now, you can do this with stocks. You can do this with options, okay? It's very easy to align so long as you know, okay, what the value of each product happens to be. Tomorrow, join us in the TheoTrade chat room in the morning. Join us, okay, on the archives. If you can't make it during the trading day, I get it. That's fine. I'm actually going to spend time aligning these two products for a short duration pairs trade. And that short duration pairs trade, we're only going to look for a matter of days to weeks for these two products to converge upon one another. We're actually going to go ahead and we're going to align it. We have to align volatility. We have to align the value. The fact that the XLF happens to be a $22 product when the Qs, okay, are a $110 product with variance in the volatility. So again, if you can't join me tomorrow morning, okay, in the TheoTrade chat room, check us out in the archives, okay? It's part of Total Theo. Thanks a lot, everybody, for joining us here at TheoTrade.